Good morning, everybody, and I hope you all are doing well. COVID cases are increasing, and we need to keep a practice of using and following three things: mask, sanitizer, and social distancing. Today, the Asian markets are trading in the negative territory despite US markets close with hefty gains. The Singapore Nifty is following to the domestic flows and it's trading in the red with nominal losses. FIs sold to the tune of 900 crores on Monday, and also they have reduced their long positions substantially on index futures as well as on stock futures. For the day, 14,740, 14,800 would be major hurdles for the market, and supports would be 14,600 and 14,500. Below 14,450, we could revisit the levels of 14,300 or 250, where the Nifty was on the day of monthly expiry. The market is following to the formation of range bound activity. Even though there was sell off in the market on Monday, we saw smart recovery from lower levels with the help of commodities and IT companies. So market was around 14,450, where the market has spent almost maximum time in last 20 days. Whenever the market has fallen, except on the monthly expiry, we saw maximum time market recovered from the lows of 14,450. So 14,450 is now going to act as trend decider level for the market. Until the market is not breaking the same, we may see range bound activity. On the higher side, as we mentioned, 14,800, 850 would be major resistance for next few days, and we are of the view that market could spend some more time between the range of 14,850 and 14,450. Pandemic sensitive sectors, banks and auto were down heavily. Beneficiaries did well, technology and FMCG. They closed at the highest point of the day. Globally, commodities are doing well, and the same is here. Be stock specific for the time being, because markets are going to remain volatile and it is going to follow the flows from the domestic markets, and that is why we need to be little bit careful on index and index trading. But yes, if there is a medium to long term view, then certainly we should look for adding long positions in select companies. I am to say those which are part of index heavyweights or Nifty 50 with a medium to long term view, as the market is following to the structure of corrective pattern. Even when the second wave was there in the US, the market has spent time between the specific range of 5,000 points, from 30,000 to almost 25, 26,000 on the downside on Dow Jones, and later on again it recovered back. So here also, if we are going to see some corrective pattern, or if we see the range bound sort of activity, then we are of the view that market could spend time between 15,400 on the higher side, which is the maximum highest point that we saw in last 2 months. And if there is any furthermore correction in the market, then we are not expecting market to fall below the levels of 13,500. So in case if there is any furthermore weakness or panic, we could see the levels of 14,000 or maybe 13,900, but we are not expecting market to break the level of 13,500 unless and until there is any specific major solid reason. So basically, the strategy should be to look for adding long position with a medium term view if there is any major panic or correction in the market. That's all from my side. With this, I am ending today's morning podcast. Thank you very much for listening in, and have a great day to all of you.